Sandeep Tandon, who is also joining us from Quant AMC. Right. Sandeep, good morning. Thank you so much for joining us. We were really looking forward to having this conversation with you today. So much to discuss about. There's a lot of action at Quant. But I'd like to start our chat around the PSUs. You know, people who admire you, who love your style of stock picking and theme, which you actually spot on every now and then, say that a nice corrective phase has come in and you've just raised a very meaningful sum from your PSU fund. Your detractors on the other side, who criticize you and who look at you with doubts, say that you called the top in PSUs. So let's take the discussion forward on how would you be going about deploying this money in the PSU, and what's your take on PSUs? Is it right to look at the entire PSU pack in one light, or we have to take it carefully that you have fresh funds for PSUs now?
So, the way we are looking at, we have been talking about value as a thesis, and obviously PSU qualify as a value thesis right from September 2021. So it will not be, we were relatively, as compared to somebody is looking at the top, we are very early in identifying that inflection point, and I've been very bullish for last more than 2 years now in this space. So but we remain very constructive. If you look at the larger picture, we are looking for the PSUs. Okay, neither we get too complacent about the move which we happened very recently, nor we get too tense about what happened in last 2 or 3 trading sessions. Okay, it's a part of life, when market rallies significantly, it's bound to correct. So everybody, I behaviorally say, when people talk about healthy correction, what happens, health of most of the participants get affected. Okay, but as an institution, when we look at much larger pieces, I think something when you look at the larger pieces, how the sentiment or the perception is getting built globally about India, how is the global liquidity situation. And if you look at in tandem, then answer is very different. Okay, and I always talked about that growth as a cycle which peaked out in September 2021, which lasted for a decade, more than like started in or rally from August 2012. And if even 20-30% of money shift from growth towards value, there will be big up move which we can continue in value stock. And that's a thesis which we are playing, and I think it's a decadal call. It's not a just 1 quarter or 1 year call which we are playing out. And obviously the bigger call is value, not PSU, and within that PSU fit the bill perfectly. So it is apt to for us to say and look at the changes which is happening. Okay, look at from the governance point of view, changes happening in the public sector, the capital allocation which has been a very big concern in the past, that has settling down. Okay, people used to look at the political outcome. These are the company which was vulnerable on that thing, that has strengthened a lot. Okay, so if you look at multiple data points, okay, it is all supporting a largely a very constructive thesis. Okay, and still grossly underwrote. Okay, now if you really look at, if I have to address this point of a very recent correction, I think one of the channel I talked about, when your conviction is not there. Okay, like majority of the portfolio managers or the AIF or PM managers don't want to even talk about PSU. Okay, this is the lowest thing on their priority list. People rather say it is it is in the negative list. We don't buy PSUs. When some of these participants are forced to participate in these name because PSU stocks or value as a thesis has been delivering very well, they participate because of just to manage their underperformance. Okay, the underperformance was very meaningful just to manage that when you buy these names. Okay, obviously then conviction is not there. When first round of correction happened, and that's the reason I have seen the massive sell-off comes. People vomit immediately because it is not coming from their conviction. It is the compulsory trade which they are participating. Though when conviction is not there, when any jolt comes to the market, you give up first. And this is what exactly happening in the market, and it's valid for majority of the mass large family office investor, ultra HNI, who have been never believer of this thesis. Okay, so see, we as a house, we always believe that we are unconstrained fund house. Okay, if we see opportunity in growth of particular sector, we will participate. And when we are seeing a decadal opportunity coming in these names, I will definitely participate, and we don't get disturbed. What happens at these corrections can be a great opportunity, since we are launching our own PSU fund, which will be closing on 15th. We think it's a timing has been can't be better than this when they have corrected a loss when we get an opportunity to deploy. So we are very happy about that.
Outstanding. What a great point you made. It's a decadal call. It's not a short-term one. You had dry powder via your PSU fund, and you are getting names at lower prices. And that point which you made, that there's a massive shift on the way corporate governance and allocations are made. We were Nikunj and I last 3 days have met a lot of ministry officials here in ET Now, GBS, Power Ministry, Railway, Mr. Gadkari. All of them are saying that the way PSUs will lead the charge on capex is just starting off. So it marries the point which you say. Yesterday, I also observed there was a big trade which your house has taken on a recently listed hospitality name. I won't take the name. It's a very large call which you've taken, the most recently listed hospitality name, if I'm not wrong. Hotels, what is your call there? You're being very choosy in your hotel picks at your fund.
So we have been very constructive about tourism as a space. Okay, if you really look at, I think tourism has been a talking point for post-pandemic, and now what happened even post Ram Mandir temple. Suddenly, this has become a buzzword. Okay, I think something has changed post-COVID. Okay, people who used to save money and suddenly they realize. I'm just looking at much larger thesis. When people have realized, their life is very limited. Why don't we enjoy it? Instead of saving, something got changed in terms of consumption thesis. If I have to look at the behavior aspect, if I have to talk about that, got changed.
But people are still circumspect whether this uptick in LIC is going to continue or not. What's your thesis behind it?
So if you understand us, then we try to identify whenever sector or stocks in the most neglected zone. Okay, and we tend to prune down our exposure when stocks are trading in the admired territory. So LIC was one very classic sample. Okay, and it corrected significantly. In fact, if you look at post listing, also stock has actually never performed. And this time, when it became closer to significantly lower levels, we spotted this opportunity. It was traded in the most hated zone, despite one of the largest market cap company in the PSU space. Okay, this has a potential to qualify for an index stock in future. Right now, the free float aspect or the impact was on the higher side. It doesn't fit the bill and it's not part of the FNO list also. But one point of day, you will see this stock also coming in the index. And when we spot that opportunity, that despite numbers has a potential to improve, which we have seen in this quarter, and it is an extremely neglected, hated zone. So from since we are largely a behavior house, we spotted that brilliant opportunity, and then this is the time to build up exposure. Since we are constructive on value as a thesis, we are constructive on even insurance and mutual fund as an industry in a big way. We are constructing on a we are very constructive on the PSU. So it's a combination. This was a perfect fit choice for us, and that's the reason as a house, it's a publicly disclosed information. We took a large bet, and it paid off very well.
Hi, morning. At the recently concluded GBS, you also had the Power and Renewable Energy Minister talking about how the sector is really gearing up for capacities to meet the growing electricity demand, given that there's been a huge surge as well in economic growth. As a space as well, a lot of stocks within this sector have fired up. What's your take on the power stocks?
So power or energy as a thesis, we remain very constructive for a while. We have been talking about for more than a year now. Okay, this is the opportunity which we talk about, both in the not only in public sector, even in the private sector, there's a great opportunity. And again, this is also, if I look at much larger thesis about renewables coming into picture or new age energy, I have to talk about. I think then this thesis can last even again for a decadal perspective. This is another very big call. We believe all power company should be given the shortage of the day this industry has. Definitely is a space which we like. Now only challenge comes into picture. We have to see up to what extent it has been priced in and what up to what extent it's not. So I think the best strategy to play through sector rotation or through in this case a stock rotation sort of thesis. Okay, because nothing is very cheap now. Okay, so they have all have rallied. So, but if you are a view with 7, 8 years, 10 years, I think the space has still potential to look at bigger names. So I'm not talking about smaller company. I think the bigger houses, the corporate companies should be a beneficiary of the space. So we remain constructive, keeping in mind that they have run up a bit more than what a lot of people would have visualized.
Right. Sandeep, on the subject of Paytm, I mean, we all know how murky the story is out there. I mean, as latest as this morning, you've got a Macquarie cutting the price target all the way to 275 now. We all know the kind of MCAP erosion which has already happened and what, even the finance ministry or the RBI stance is on Paytm. But you were one of the first ones to actually book out of Paytm before the situation got murky. What were the signs that you picked up that told you, it's time to back off from here?
So, first of all, right from September 2021, we didn't participate in any of the new age companies. Okay, it's only in last few months when they have corrected a lot, and we remain very constructive on the digital. We think digi banking will be new reality in this country maybe in next few years' time. And so the entire way of payments, so everything looks from a digital perspective. I think something will get changed significantly. It's already changing. Banks will not exist in this form what we are seeing today. So we are actually believe that the derating of banks which started can last for longer term perspective, and these are the company could be beneficiaries. So I'm just giving the background with this thesis. We also build small exposure as a diversified portfolio in PTM also. But we were not very happy. Some of the data points were changing. So we also pruned down a bit. And then for reason we took a very large bet in another company, which is could be a very sizable. So we pruned down all the NBFCs and some of these names in our portfolio. But it's nothing, it's just a coincidence that we did prune down a bit and then this event happened. So it's very difficult to visualize this unknown risk which play out. So it's not like we were, it's just a luck factor that by unknown risk, nobody can quantify that.
I get that point. But Sandeep, you made a very, very interesting point that banking is not going to be done the way it is, and that is why you are seeing a sort of derating of the entire banking pack. In this evolving phase, who do you think out of the current contenders list and the entire financial basket could be the winners and the losers?
So I say since generally we don't talk about stocks, so that's the reason if you notice that in our banking space, I think we could be the overall banking exposure will be less than 5% in overall mutual fund, Quant Mutual Fund portfolio. And in whatever we have is largely the PSU banks we have and smaller banks we have. We don't have any large private sector bank in our portfolio. So obviously, it's a clear indication there's a house we believe that leverage economy as a concept is will lose its relevance and banks are all part of the leverage economy thesis. So from a long, but again, this is not something which is happening over next 1 year or 2 years. This is a larger few decade thesis we are talking about how few decades banking sector in next 3 decades will not exist the way it exists today. So obviously, then what is the choice? Okay, if I have to look at the obviously we are very optimistic about the digital related thing. Anything related is moving in that, so any NBFC on the digital side, even putting efforts, and if it's a meaningful opportunity. But we have to keep in mind these are evolving stages. Okay, it's not something we can say with 200% confidence. Okay, this is a surety. But obviously, if comes from the larger group has a balance sheet strength, then the probability and has technological advantage, and the probability of they becoming a winning in this space makes more sense rather than looking and betting for a smaller name because it's going to be huge capex. Okay, people have to invest very sizable. I said, okay, today if you talk about everybody talks about AI or ML in this business, like we are all using, but I can tell you 99% people don't use it. Okay, because the noise level about these things is very high. If you look at just pure IT budget of some of these companies, then you realize that the investments have not been made, which is required for AI or ML related activities. So I think it becomes a hype, and that's the reason we are more worried about smaller names when you see these activities in the name of digital or new age theme or technology. The hype is much more than the reality, and that's the reason we would like to skip or avoid some of these smaller names and focus on the bigger opportunities.
Right. Sandeep, I remember almost 2 years back, you got into another kind of pretty ignored, I would say, not very admired name in the consumer space, consumer hotels. In a kind of a other large shareholders kind of a pressure to reduce their debt. Even if 3.5-4% is diluted, it will get absorbed because there's a massive transformation happening in that company in the FMCG business numbers and and even hotels business numbers speak for themselves. Are you still holding on to that idea? Do you see it's great time to, if this overhang brings the stock lower, to get back into, because there's a big transformation actually happening in there for the longer term?
So if you see our portfolio, I think few months back we exited nearly at the top of the ITCB, I think around 470, 480, 411. So we exited that position. We don't own a single share at ITC at this point. But as a thesis, I will say consumption as a thesis is coming back. Yes, food inflation is a challenge, okay, but given the background what we have gone through to the logistic issue which has been there in the past, I think that is settling down. Okay, so if I have to take a bigger call from these levels, whether consumption cycle can pick up, that's, I think answer is yes. The consumption, we are seeing early signs. Okay, so of consumption cycle coming back, particularly on the rural side, we are seeing some early signs of recovery, though it is not completely reflected in some of the macro data people track it. But it's a very early sign. So I think, and why we are looking at early sign, because market is always ahead of, okay, market will not wait that it should unfold. So people do take preemptive steps, okay. And a student of predictive analytics, we also try to capture these data points, because early leads not only is good from a return perspective, actually protect your downside. If you buy at the bottom of the cycle, or when the stock or sectors are in the neglected territory or the most hated zone, your downside gets protected. And as a fund house, I think that is the biggest strength which we try to identify at the inflection points rather than chasing the moment.
Okay, thanks very much. It's been a pleasure interacting with you, Sandeep, to get your all-round view, especially on the PSUs and then, of course, sectorally, what you make of the market. All right.
Thanks a lot.
All right.